Thank you for joining us. This is Business Incorporated live from Lagos, Nigeria. I'm Chimezie Obi Iwago, and I welcome our viewers here and around the world. Coming up, Zimbabwe introduces new bond note as cash crunch bites. World Bank expects Democratic Republic of Congo's economy to average 5% growth in 2017-2018. Plus, a look at how the refinery crackdown in Nigeria's Niger Delta unsettles members of the community. Now let's get started, and we'll begin with the market, starting off here in Africa. The NSE All Share Index was looking up at intraday trading today, up 0.57%. But the market in South Africa was in the red at midday Nigerian time. However, Egypt's bourse rebounded on Thursday after sliding for 3 days, partly on concerns that U.S. President Donald Trump's policies could hurt the economy. The market is closed today for the weekend. Nairobi Stock Exchange was also down on Thursday, as we can see from that slide there. Moving on to Middle East, all the markets we track on this program were in the negative territory on Thursday. The markets in that region are closed today for the weekend. The Saudi index edged down 0.03% as loss-making Nama Chemicals, which had soared 37% in the 4 days through Tuesday, after it announced the outline of a recovery plan, pulled back 6.3%. And the Abu Dhabi market there was down 1.77% on Thursday. Dubai Financial Market down 0.82%. Qatar Stock Exchange down 0.24%. Our investors in Europe have their eyes focused on the latest non-farm payrolls in the U.S. and a European summit in Malta. The earnings season also continues to draw investors' attention this Friday. For more on the European market, let's bring in my colleague in Frankfurt, Christoph Korber, to tell us more about what's happening on the market. Now, good afternoon, Christoph. Glad to have you on the program. Now, on the calendar today is the release of Eurozone final PMI figures and retail sales. The U.S. job report is also expected. How is the market gearing up to receiving these numbers?
Well, we're seeing somewhat of a mixed picture here on Friday, Jimmy. Retail sales across the Eurozone fell for the second straight month in December. Sales in the 19 countries that use the euro were down 0.3% from November, and analysts had actually expected a slight increase. Now, the market's purchasing managers index held steady in December and slightly beat estimates there, suggesting a continued upbeat business climate. And as for the job report, well, investors are expecting that U.S. employers added another 175,000 jobs, which would be a solid, if not unspectacular, number in that first job report since Donald Trump has become president. But until the actual data, which will be published in about 1.5 hours, isn't out, investors here in Frankfurt are keeping their cool. It's been a wild week so far with quite some dramatic swings. And so we're seeing only slight gains here in Frankfurt and across other European exchanges.
Our European leaders are gathering in Malta, aside from discussion on the future of the EU without the UK. What else do you think is on their agenda?
Well, the immigration crisis is high up on their agenda. EU leaders agreed on a 10-point program to curb the flow of migrants entering Europe via the Mediterranean, vowing a closer collaboration with Libya. The war-torn country is one of the most important transit countries for migrants heading to Europe. But obviously, there was the orange-tanned elephant in the room. Donald Trump did have conversations with EU leaders from France, Germany, and Britain before this summit in Malta. And they briefed their colleagues on their impression of the new U.S. president. There has been widespread criticism among EU leaders regarding Donald Trump and his yet 2 weeks in office so far. French President François Hollande saying the pressure on the European Union by the new U.S. administration is unacceptable. And even the European Central Bank, which is not known to offer political opinions in a loud manner, said Europe needs to stand together against Trump.
We'll keep monitoring that summit to see what the outcome will be. Now, let's look at the week that has just that's ending today, of course, is a week of earnings report. And, of course, today, Snapchat has just come up with an IPO. Now, talk to us about this IPO and, of course, give us an outlook for next week.
Well, that'll be interesting. Snapchat wants to raise $3 billion, but says in this official IPO paperwork that the company has been losing money and, quote, may not achieve or maintain profitability. But investors tend to give loss-making tech companies credit as long as they keep expanding their user base and thereby increasing their relevance to the market and ad revenue. So the key words here are strong, persistent growth, and that may be becoming an issue for Snapchat because the company only added 5 million users in the last quarter compared to the months before. And eventually, we have to keep in mind a profit there will be necessary. Take it from Twitter. The company has been listed for more than 3 years now. It's still in the red, and the share price has halved ever since.
Thank you very much, Chris, for that update, and do have a wonderful weekend. We'll move over now to the U.S., where the stock index futures pointed to a higher open on Friday morning as traders eyed the release of jobs data. Non-farm payrolls, the unemployment rate, and average hourly wages are all due at 8:30 a.m. Eastern Time. Elsewhere on the data front, market services PMI is due at 9:45 a.m., with the ISM non-manufacturing index and factory orders set to come out at 10 a.m. On the earnings front, AutoNation, Clorox, Hershey, and Madison Square Garden are among companies set to report before the bell. And looking at that slide there, we can see all the indices we track here. The Dow Jones up 0.08%. S&P 500, of course, is tilting northwards, 0.08%, and NASDAQ is also tilting up 0.06%.